Is December 8th, 2020. What happened in the markets? What happened to mortgage rates? Don't go away. You'll find out here in a minute. Hey folks, and thanks for coming back. It's been a week since I've been here, and I want to thank you for the patience and all the kind words from you guys in regards to my father-in-law. He passed on us about a week and a half ago. Thank you for your condolences. It was a blessing. We actually celebrated his life. We didn't mourn his death. So that's how you should live life. Live life every day with no regrets, and try the best you can to do that. Just a little word of what we're going to do, so you know where our plans are. Next year, or starting in, next year is a couple weeks away, we're going to start a little bit of a different format. I'm going to do the mortgage or the rate update every day to keep you informed. Home buyers, home refinancers, real estate people, financial planners, mortgage professionals, because I think you guys are learning a lot from this channel, from what I hear from a lot of the feedback below. But what we're going to do is maybe change up the format to having at least one really nice produced video a week in regards to economics and your money, how it can really play an impact on you. The whole gist of refinancing your house or buying a house is to create wealth, or save you some money, or be a good financial steward of your money. So we're going to dissect into that a little more in detail in 2021 to talk about debt, talk about taxes, talk about investments, talk about housing, talk about retirement, talk about a whole bunch of other things to help you guys become more informed investors and good stewards of your money. So that being said, if you like the video, please don't forget to give me a thumbs up, subscribe down below. So let's get to it. What happened today with rates? Why do people come to me every day and watch my videos? And I love for you guys doing so because it allows me to do what I do. So what happened today with rates? I will show you here in 1 second. So the MBS market was up 6 today, and we're going to have one huge video explaining the Federal Reserve, mortgage rates, the bond market, and so forth to explain this number to you, so I don't have to go over this every day with you and bore those that show up every day to see what happened with mortgage rates. But let me condense it right now for the newbies out there. This number right now is what happened to the price of a mortgage-backed security. What is a mortgage-backed security? Well, it's the bond that trades that is the biggest factor or the biggest element of mortgage rates. Okay, there's this along with what we call loan level price adjustments. Those loan level price adjustments are things such as, is the house your primary home or rental property or a second home? That's what we call a loan level price adjustment. Price adjustment. So the riskier the loan for the bank, the higher the rate that we're going to charge. So we call it internally your price. When we call price, we talk about of your rate. So what is the rate? What is the price? We call it your price. So my price today on all my loans is 2.875. I'm just saying that. That's the rate, okay? So there's the MBS market that we follow here on a daily basis. Then the other element is what's called loan level price adjustments. What loan level price adjustments are adjustments to the good or the bad to that mortgage rate. So let me explain this to you. Let's say there's a benchmark. Let's say the benchmark is 3%, just to make it simple. And that that is based on a great credit score, a low loan to value, and I'll explain this in a second. Low loan to value, you're not getting any cash out or whatever. So the base rate is 3%. So now let's say your credit score is a lot better than the average person. Well, your loan level price adjustment will actually be a deduction in the rate. So instead of 3% being the base rate, you might get 2.875. Okay. However, if your credit score is lower, let's say you have a 650 credit score, that's lower than the norm. I'm not saying it's bad, but it is lower. Well, your 3% rate, you're going to have a loan level price adjustment up because you have a lower credit score. So let's say now your rate is 3.25. Okay. So another thing is, let's say it's your primary home. Well, you probably have no adjustment to the rate. However, it's an investment property. Well, it's a higher risk to the bank, so your loan level price adjustment will be bumped up a little bit. So now let's say your rate is 3.25. Okay, so now we say you're looking to pull out cash. Okay, that is a loan level price adjustment up. So now your rate is 3.375. Okay, let's flip-flop this around. Your benchmark is 3%. You have a fantastic credit score. So now your rates come down a little bit to 2.875. It's your primary home. You're not looking to pull out any cash. You get a 2.875 rate. Okay, so I hope you get it, as there's a whole bunch of variables in there that can change your rate up or down. The down factors are this. It's not your primary home. It's an investment property. It's a multi-unit building. You're pulling out a bunch of cash. You owe $100,000. You're like, Dan, I want to refinance and pull out a bunch of money. You might think, well, there's no difference because my loan to value isn't that high, but there's a bigger risk to the bank because we're giving you more money than you owe. I'm not saying it's right or wrong. I'm saying it's how it works. It's a rental property and it's a 4-unit building instead of a single family home. More risk. So as the units go up, why the more risk? If you have 2 tenants that move out or you evict, now you have 2 less rents coming in to help you pay that mortgage. It's riskier for us. It's riskier for you as well. On our side, we charge a higher rate. All banks do. So basically the component of your mortgage rate is the MBS, where the yields are on the MBS, in the MBS market, and I'm going to go over that in detail here in a second, plus those loan level price adjustments, plus there's also determinants on factors such as your term. Do you want a 10-year, a 15-year, a 20-year, a 23-year, a 28-year, a 30-year? Those all, the longer the term, the higher the rate. So let's get back to where my rates are, or what's going on in today's market. Today we saw a tick up of 6. Okay, that's 6/32 of a change that happened today to the price, and I'm going to emphasize price, to the price of the mortgage-backed security bond. Okay, as the price moves up, yields come down. So as this price goes up, your rate comes down. How this works is I'm going to go over and educate you guys quickly on the bond market, how to invest in bonds. The more you pay for a bond, the lower the yield. Okay, here's what I mean by that. Let's say I buy a $100 bond, maturity bond, that it comes due next year. So next December 2021, I buy a bond and I'll get back $100. Okay, so that's the face value of that bond. Today I pay $50 for that. But again, remember next year I'll cash that in and I'll get $100 back. So I paid $50. I'm getting $100 next year. What's my yield? Well, it's 100% because I doubled my money. I got 100% return on my money. So the yield or the rate is 100%. I'm doing extremes on this, so bear with me. But now let's say I pay $100 for that bond, and next year this time of year comes and it matures and I get $100 back. So I give you 100, get $100 back. What's my yield? 0. There's no yield. There was no gain there. There was no interest rate. So you get it. When I paid 50, I paid less. My yield was way high. When I paid a lot, my yield came down to 0. So that's how all of this works. So we go back to this. We like this number. 6 isn't really enough to make any differences in rates, but I'd rather have an up 6 than a down 6 anytime. So here's what's happening through the last quarter. Now we have a new feature that I want to go over with you, just so you guys see the volatility on a daily basis. But this chart right here gives us what happened to the prices of the mortgage-backed securities in the last quarter. You can see the Federal Reserve has done a fantastic job of keeping rates really steady. If I go back in time, further back there, you can see huge volatility in this market. Well, the Federal Reserve came in and they said, you know what, we're going to buy, basically, what creates the price of anything? Supply and demand. Okay, that's economics 101. Supply and demand is what creates or determines the price of something. So what the Fed has done is they've stepped in and they're buying up quantities enough to basically keep everything stagnant. All right. So we love this because lately there's really not been much movement at all with mortgage rates. We love stability. Okay. But this chart might seem, okay, there's over time it's moved some, but it really hasn't moved that much. Well, what happened today? Okay. Again, as this goes down, rates go up. So it might not seem like it was a big much action took place today. Here's what took place today, okay? Let's think of this if it was a stock and it traded at $103.60. Well, at one point it was $103.50, and at one point it was $103.68. Not a big move, but if your stockbroker could have bought it here instead of here, you'd have made some money, okay? That's what I try to do on your behalf. I try to grab the market, grab perfect timing to get you the best rate and the best fees that you could possibly get anywhere in the market. Okay, so that is a blow up of what happened just today. Okay, and again, we go back to the general charting here. Doesn't really look like anything happened today. It's right here. So we ended the day prior to right here, and we did today here. Nothing really, nothing. Well, you can see this. There's some volatility in the markets. Okay, so that's what's going on. So what creates this, or what makes changes in the market? Well, supply, demand, and economic news. What economic news came out today? Consumer credit change. Really, there's nothing there that really affected anything in the market. Okay, so let me just explain. In a normal market, things such as what the GDP is, gross domestic products, what inflation's doing, what the dollar's doing, what the stock market is doing, what events are going on globally. All this stuff usually has a big input or impact in the stock market as well as bonds, especially mortgage-backed securities. In today's world, we're in a pandemic. Half the people are working from home. Half people aren't even working because they can't get a job, or their jobs are closed down or furloughed or whatever. So there's really nothing going on there. Gross domestic products is negative because as a nation, we're really not producing a ton of things right now because a lot of factories are shut down. So it's all bad. So you would think, normally in a normal market, the stock market would have crashed. I mean, completely crashed. And bonds, such as even mortgage-backed securities, would have took off, and we would have had basically interest rates at zero. But the Federal Reserve stepping in and, I won't say manipulating, but they're kind of working with interest rates. And then the government is out there trying to create a stimulus package with pandemic relief, payroll for unemployment benefits, additional unemployment benefits, funding companies, and other things. And that is a complete fiasco right now because it's one big political game. I'm not a politician. I'm not going to preach politics here, and I don't want you to comment saying, Dan, I don't want to get into politics in this channel. But what they're doing is a complete shame with the company right now, or the country right now, on all this stimulus packages and so forth. We need it, and there's a couple people on the top of the food chain in all these areas that are just pulling the strings just because of political issues. So we'll get off of that quickly. All right, so that's basically what's going on with a lot of this stuff right here. So we'll go through some of the rest of the economic news that's coming out this week. Labor costs, non-labor costs, 10-year Treasury auctions, and a whole bunch of other stuff. Initial jobless claims, consumer price index. So you can see, let's break this down just a little bit. The consumer pricing index, CPI. This is a measure of inflation. How much prices are changing? Okay, are they going way up? They're going down? If they're going way up, that's an inflationary. One of the biggest villains, I'll say, of bonds is inflation. And I'll go over that in one of the new videos that we're going to do. And a whole bunch of other things. Nothing in here, nothing is really going to affect the bond markets. It will affect the stock market. But the bond markets, The Federal Reserve is doing a fantastic job to stabilize that as much as they possibly can. So I don't see anything, especially for the rest of this year into the first quarter of next year. Now, once we get the vaccine and everything else starts to go within that area, I see a V-shaped recovery, and we'll get to that in another video. So the next slide I go over is where interest rates are nationally. So what they do is they post, I subscribe to this, I get this updated every day, and this is what mortgage rates are doing nationally on average. So you can break it down, and there's a chart right here. You can see from last year at this time, we were basically almost all rates other than VA rates were about 4%, and you can see where we are today. Okay, so here's the breakdown of this. On a 30-year conforming, 30-year jumbo, 30-year FHA, and 30-year VA. The average rates are right here, 2.8, 2.88, 2.85, and 2.41. One-day delta, 7-day delta, and the delta since February 18th of 2020. Delta means change. So rates are down 2 basis points or 0.02% since Friday, or I'm sorry, since yesterday. So this rate yesterday would have been 2.82. It's down 2 basis points, so we're at 2.8. A 7-day delta or 7-day change where we were last week, we were at 2.79 and we're up 1. So you can figure that part out. But these are where rates are nationally on average, okay? And again, based on those loan level price adjustments, your rate can be a little bit higher than this or a little bit lower than this. But the one thing I want to focus on is over here. Well, let's go up here. You can see last year, if you refinanced or bought your house in December or January of last year or before, your rate's probably about 4%. Is that where you are? If it is, I would highly suggest you reach out to us to see if we can get you into a rate such as this. If we can get you from 4 to 2.8, huge change. Especially if you owe hundreds of thousands of dollars, you might be able to save $100, $200, $300, $400 a month. So that's where rates are right now nationally. So let's get to see where my rates are today. So just like the sheet that I just went over with you, I'm putting the average just for I'll say a one bucket. And what I mean by one bucket, I created a criteria, and I'll explain this in a little more detail, and giving you the rate. So what these rates are based off of is a $250,000 loan. Here is your credit score that's being used. This is the loan to value being used, and it's on a single family primary residence seed home. Okay, so 740 credit score. You probably know your credit score. If you do not, gotta sponsor the show. It's called creditscoresandmore.com. It's plural, so creditscoresandmore.com. Just go there, click option number 1, complete it. It'll take you 3 minutes and you'll get your credit score, and it's free. Don't sign up for any of the bells and whistles, any other stuff. Just do that and just let me know what that score is, okay? Your loan to value, basically that is in its simplest form, it's the loan divided by the value of the property. So if you have a $100,000 loan divided by the value of, let's say it's 200, so you have a $100,000 loan divided by a $200,000 value, that's 50%. 100 divided by 200, 50%. I'm using a factor here of 80% and down here 75%. So this is what all these numbers mean. So let's break it down as we just did with the rate matrix that I just showed you previously. So my rates today on a 30-year fixed, no points, if you're looking to purchase your home or do what we call a rate and term, meaning you don't want any additional money, you just want to refinance your current balance. My rate today is 2.75 with an APR of 2.835. If you want to pull out money, okay, that's a loan level price adjustment. Remember we spoke about that. It's a little bit higher rate, okay? But in this case, it's a little bit lower because I changed my loan to value to 75%. Okay, so I'm not trying to trick you. I just want to show you there's a whole bunch of variances in here when it comes to your rate. So when you're requesting a rate quote from me, please, I'm going to be as specific as I can. I'm not trying to avoid answering your question, but there's going to be questions I need you to answer for me so I can get I can get it right. Put it that way. So if you're looking to cash out, 740 credit score, 75% loan to value, my rate today is 2.625. Okay, so I'm going to show you next is with the same criteria here on a 15-year term. What's my rates? Okay, well, on a 15-year term, that criteria at 740 credit score and 80% loan to value is 2.375. Okay, cash out, 2.625. I rounded to the second digit just to make it simpler on you. Okay, so that's where we are on normal conventional financing. Now, other programs that we have, and we reviewed this on the rate sheet that I had prior to this on the national averages, they had FHA and VA, but I'm going to actually throw in there also our USDA program. We are known in California for our USDA program because we do all kind of areas in California. There are other areas of the country, but California is really where we do very, very well. We have several loans in our pipeline right now of over $500,000 and $600,000 loans with the USDA program. Benefit of that is 100% financing. So if you're out in California or anywhere in the country and you think you qualify for a USDA loan, it's basically a rural area, but it doesn't have to be farmed. It's not a farm. Let me know. I'd love to look up the address because the address has to qualify for the USDA program as well as your income. And I'd be more than happy to walk you through that part of it. But USDA, VA, and FHA. Here's where we're at with that, and I'll break down each one of these real quick for you. USDA, like I was saying, is mainly a rural area. Call us, email me, or let me know what your address is. And I'm also going to need your income because there are income requirements for this program. But you can go up to 100% financing, okay? I use 740 right here because that's the top tier rate. That's the best rate there is. So a 740 credit score at 100% loan to value on a USDA program, my rate is 2.375. VA, if you're a veteran, God bless you. Thank you, thank you, thank you. If you're a veteran and you qualify, you have your certificate of eligibility, you can qualify for up to 100% financing as well. That rate is 2.375 also. Okay, now if you don't qualify for any of these and we're looking for one of those low down payment programs, we can go with an FHA program, requires 3.5% of a down payment. No, you don't need 5%. No, you don't need 10. You don't need 20% down when you're looking to buy a house. You need 3.5% down. 740 credit score if you're looking to purchase a home or refinance up to 96.5%, rates 2.375. Are you kidding me? Phenomenal. Now, this is our bread and butter product right here. Our jumbos, super jumbos, and then I'm going to get to our boutique program. I have programs up to $5 million. 780 credit score, 60% loan to value. We can go higher on the loan to value. We can do a lower credit score. So if you have those and you're like, Dan, what can you do for me? Just let me know what we're looking for. Let me know the loan amount you need, what you think your house value is, and what your income is, and credit score. I'd be more than happy to give you a quote. Right now on this, 2.875, 30-year fixed, no points. 30-year fixed. 2.8, under 3% for a jumbo loan up to $5 million. Holy smokes. Now, this program is available in specific counties in California, and those counties are right here. If you're in any of these counties and you need a loan up to $1 million, you only need 5% down. 5% down. You can even refinance up to 95% loan to value. Remember what loan to value is. 780 credit score, up to 95% loan to value, $1 million, 3.5%, 30-year fixed. Those are my rates for today. So now you're like, Dan, I love this stuff. How do I get a hold of you? I need your help. We're looking to buy a house. We're looking to build a house. We're looking to refinance. We just want to kick the tires and see, does this make any sense? How do you get a hold of us? Well, great question. Just go to therateupdate.com. Probably what most people do is they just scroll down here and they call our 800 number. Many times I answer. If I don't answer, please don't worry. You're in good hands. All the applications funnel through me. I review every application. I review every program that we fit you into. I review the fee structure, and I review the interest rate when we lock you in or advise the loan officer when to lock you in. I control all that in the back end. So you might not deal with me specifically person to person, but I am involved in your application from start to finish. I can promise you that. You can give us a call at 844-775-LOAN. That's 888-775-5626. Or one of the easiest ways is just go here. A lot of these tabs are going to take you right to an application or a quote. You can apply right now and hit the Apply Now button, fill out as much as you can. At the end, based on the questions you answer, it's going to prompt you to upload some documents, like your mortgage statement, maybe a W-2, things of that sort, so we have all the information from you that we can get back with you with a specific dead-on quote, so we don't have to sit here and guess. Or, here's the frustrating thing. Hey, I called a place and they offered me 2.875, and this happens all the time. 3 weeks later, I'll get a call from somebody saying, Dan, I was going through XYZ mortgage company. They quoted me 2.875. Now they're saying my rate's 3% with 1 point. That 1 point's $2,500. Why? Well, because they didn't ask you all these questions up front. And they're just winging it. They want to tell you what you want to hear at the beginning, and they know as they get you through this process that they're going to put you through the ringer, and then at the end they're gonna throw that on you, and then at that point you're like, let's just get this done. So I promise we won't do that. So you can hit Apply Now. You can hit, if you're looking to purchase a home, you can do the purchase qualifier. If you're looking to get a refinance, you can click this. You can get a free quote right here. That's probably what most people do. Other features of the website that we got, since I have you this far along, if you need a home valuation, this is the #1 home valuation system in the country. And usually there's a fee for this. I pick up the costs. So feel free to click this. It'll take you to right here. What you want to do is just plug in your address, click it, and you're on your way. It's awesome. If you're looking to buy a house, you can even find this up on the free tools. Search homes for sale. Click it. You're gonna enter in this the city where you're looking. Click it, and it'll find you properties in that area. We have realtors throughout the whole country that we can work with to refer you to. If you do not have a realtor in mind, we'd love to work with you. So we'd love to get you pre-approved, set you up with a realtor, and get you on your way. So that is it for today, guys. Like I said, if you would, please do me a huge favor. Give me a thumbs up. That's all I ask. Hit the subscribe button down below. Bang the bell. So every time I do post a video, you get an alert. Other than that, God bless. Thanks, guys. Thanks for watching. You make me able to, you give me the opportunity to do what I love. And I appreciate that from you guys. So take care. Have a great day. See you tomorrow. Bye-bye.